by Raghunandhan NL, Director at Nuvama Institutional Equities this afternoon, and we will be actually talking about interesting things that are happening overall in the auto space, Tata Motors, Eicher Motors. Where is the road actually headed for these companies going forward? Thank you so much, Raghunandhan, for joining in with us this afternoon. And firstly, I'm going to just start with Tata Motors. It's at close to its 52-week high and has seen a strong rally this year too. Do you think that the positives are baked in the price now, and maybe there's time for some correction?
Firstly, I don't think positives are fully priced in. I think there are further upgrades which are possible both on the volume side as well as on the margin side. If I can explain a little more on that, the sales upcycle in global four-wheeler industry has just started. 2023 calendar year is the first year of upcycle, and history shows that upcycle generally lasts for at least 3 years. So we think that there is still a long runway. Both margins and volumes can see upgrades, and management has been working towards that 10% EBIT margin target, especially in JLR. I think there we can see more upgrades happening in future.
Okay, just also, staying with Tata Motors then. So you are saying that positives are not baked in the share price yet, but they are a part of the analyst estimate. Is there further upside to the consensus targets too then?
Yeah. Currently, my target price is 620. That offers a 15% upside from the current levels. Please note that about 65-70% of my profitability estimate comes from JLR, where I am working with a 6.8% EBIT margin for FY25. And management is targeting 10% EBIT margin for FY26. So couple of good quarters on profitability side, then I see upside risk not only to my assumption but also to street assumptions.
Okay, then which are the top bets actually you would have in the two-wheeler sector then?
So there are two names. Number one is Hero MotoCorp. Hero MotoCorp offers an upside mainly because valuations are reasonable and the upcycle in domestic two-wheeler is still at an early stage. The second one is TVS Motor. TVS Motor is on the elevated side when it comes to valuations, but they are doing very well on market share and margin expansion.
Okay, then let's just talk stocks which you didn't name in your top picks. That's Eicher and M&M. What's the view on these two as well?
Yes. So I have a positive view on both these names. Unfortunately, they don't figure in the top picks, but on M&M, the only worry is that close to 60% of profit comes from tractors and light commercial vehicles. Both these segments are likely to see a muted growth in FY24. So what happens is my overall profit growth performance for M&M gets restricted because of lesser growth in these two parts. And on Eicher, the concern is more on the competition side. We are seeing Bajaj Triumph come out with multiple products in June quarter and September quarter. Then Hero and Harley to come out a product in July. TVS Motors recent launch Ronin is already doing well. So more companies are coming into this lucrative space, which might have some impact on sentiment and volume. whereas iShare is concerned.
You've spoken about the stocks that you like, but let's talk about that one stock you would avoid at this time, or maybe book a profit out of it. Any anti-consensus or sell that you have in the autos then?
Bharat Forge is one of them. Bharat Forge, we have what we call as a brave heart reduce with a 20% downside from current levels. And there are two reasons. Number one is on the export side. Bharat Forge has 50% revenues coming in from export. Within exports, global commercial vehicle, mainly North America Class 8 and Europe HCV, then the global construction equipment, and the global oil and gas. In these three segments, we expect a muted to a negative kind of a performance over the next 2 years, because of which we are concerned on the export prospects of the company. The second issue for us is the domestic part, which is seeing an improvement. A major part of improvement is coming from the defense space, where the timeline of execution of orders is uncertain, and the ATACs or the artillery guns order, we think that initially would have a lower margin compared to the blended margin of the company. The margin will also be under pressure because of reducing share of exports. So we think that one, on the cyclical downturn, it will be hit. Two, on the margin side, there will be pressure which will lead to downgrade to the street estimates. Our estimates are 20% lower than the street in Bharat Forge.
Let's just talk about the biggest transition in the EV transition now. Which companies do you see as being the biggest beneficiaries of this?
Okay, when it comes to two-wheeler, I think the incumbents are now at an advantage, because with the reduction in FAME incentives and with the commencement of PLI scheme, both these will be favorable for the incumbents. So all the small names like Okinawa, Jitendra EV, Pure EV, Ampere, all that I believe would go out of business. And within the OEMs, the top 4 5 are the ones where there is a good chance of making it or becoming a successful. Now, within ancillaries, the chance of success is significantly higher. It can be the likes of Motherson Wiring India, Uno Minda, or Minda Corporation, who will benefit both from the EV penetration as well as premiumization. So better to bet on ancillaries as of now.
Okay, Raghunandhan, thank you so much for joining in with us this afternoon, giving us an understanding on the auto space, what you like and what you not like, and what one should avoid in the auto space. But on that note, viewers, we are absolutely